Good afternoon, ladies and gentlemen. I hope you're doing great. Today is the 21st of December, a few days off from Christmas. Wanted to make a new video in regards to technical indicators and a technical indicator that you can use in conjunction with the RSI. So if we remember from last time, the RSI is this line right here, above and under, okay? You see here on a 15-minute chart, it's been going above it. These are just two scalp trades that I've gone in. You can see earlier today. The account's at 10,050. Again, it's a demo account. I'm not trying to overexpose the account, not looking to try to double the account in a week. That's not how real trading works. I hope that you take that mentality out of your head. If you have $1,000 and you want to double it, this is not financial advice, but maybe go to a roulette and put the money there. At least you'll see some beautiful ladies and have fun with the atmosphere. So, enough about that. I wanted to show you the technical indicator that we can work with in conjunction to the RSI. It's called the Bollinger Bands. Okay. Before that, let's have a quick look at the history. You see, few minor trades in the negative, and then one trade in the positive, $60 up. Nothing big. Okay. We'll be waiting to see how these scalps come up in the next few minutes. I just thought that there is going to be a big move on either of them, and I can try to scrap a couple of bucks here and there. So, in regards to Bollinger Bands, if we have a look at, let's go to the US dollar against the yen, okay? If we have a look at the US dollar against the yen, we've come here to insert, we've went to indicators, and we have chosen Bollinger Bands, okay? Bollinger Bands, as you can see right here, let me try to choose a smaller time frame. You have three bands. You have the top and you have the bottom and you have the 20 simple moving average in the middle. The idea is that whatever happens in the market is going to eventually correct itself and come back to the moving average. You can use this in conjunction with the RSI, for example, right here on the US dollar. According to this specific indicator, if we look at it, you can see it's oversold on the bottom. You can see that it has broken under the lower band here. This could potentially give us a confirmation for the market to go back up. But again, you never trade the market based on technical indicators alone. There is US GDP coming up later on today, so that's going to be a big move into the market. And there we go, we just took 15 bucks there as well. There is going to be a big move in the market, so we're trying to see how the market develops in the next few hours close to that point. So let's go on a 4 hour candle. You see on a 4 hour candle, everything changes again. On a 15-minute candle, it's different. On a 1 minute candle, it's different. Usually when you're looking to trade daily, you can try to first of all have a look at the 4 hour to have an idea of the general structure of the specific asset. In this case, we're talking about the dollar against the yen. And then you go down to a shorter time frame to have an understanding again. And then lastly, you got the 15-minute. You can still see the market's going against us here. I'll just take a small loss on that trade. Went into two trades, one 15 bucks, one minus a buck. Thank you for your time. So we can go into 15-minute and then we can go into a smaller time frame to decide our position and entering point into the market. Okay. Now, this Bollinger Band by itself is an indicator that allows you to understand the specific trend that the market is going at. However, it's not something that alone is enough to actually decide to trade into the market. Neither is the RSI. So in this case, we're trying to get a few confirmations. So on a 4 hour, we don't have that confirmation. You can see the RSI somewhere in the middle at about 42. It hasn't broken under the lower band here as well. If we go to 15 minutes, we can see it's just broken under that band. and the RSI is just under 30. It's at about 27 and it's under the lower band. If there was no event coming up into the market today and it was not a few days before Christmas, these two, as you can see, okay, can give you relatively decent confirmation about the way the market is going to behave. Of course, it's not that simple that if you follow this and this, you're always going to be profitable, right? If it was that easy, everybody would be making it. But it's just another indicator that you can use along with the RSI to understand the certain movement of the specific asset. Now, as you can see here, again, it broke above the higher band. It didn't reach the level that we were expecting it to. Okay, in this case, we can see it broke under the lower band here. Okay, in this candle, broke under lower band, and then broke under the lower band, went under the RSI, then the market started to move upwards. Here might be potentially another entry point. Again, nothing said on this channel is financial advice, but for the sake of a demo account, again, it's for testing purposes. We're gonna go ahead and take a position, and we're gonna set our take profit somewhere between the simple moving average, the 20 simple moving average, and we can decide to set ourselves a stop loss of about somewhere about 40 bucks. So we've got a 40 euros stop loss, take profit of roughly 100. Okay, that's a little over 1 to 2. We'll keep this trade running. If it touches the take profit, it will close itself automatically. If it touches the stop loss, it will close itself automatically. Again, this is simply for testing purposes, just so you have an understanding of how to start to develop your um, arsenal of different technical indicators. Okay, this position will continue running unless it hits either or one of these two. I'm not going to be touching the market, the trade itself. As I said, it's a demo. I'm not trading on my real accounts. Close to December, market's a bit crazy. So that's in general what I wanted to discuss. So if the RSI goes above the higher band here, here, at the same time, see, here it did, but the RSI didn't, so it's not a confirmation. The only confirmation that I can see is this one, where it went under the RSI, and this one right here. So we might see potential move upwards. As you see here, we went in at 711, so it's already at 7. It's already at 750. Market does have potential to go higher upwards, but again, we have a GDP result coming in the next few hours, and if that happens in the market, then there is a lot of movement that can occur. So all of the technical indicators that I have here in reality would be obsolete. There would be no point to look at them further. So if we have a look, excuse me just a moment. If we have a look here, okay, just give me a second. Let me try to move this over to you. There we go. Just give me a second. Hang on with me. There we go. You see, we have US GDP in the next hour and a half, continuous jobless claims. These things will move the market. In which direction, nobody knows. If somebody tells you they know, that's a blatant lie. These numbers, sometimes people say they're manipulated as well. Everything you see, you want to take it with a grain of salt. But again, in the next hour and a half, we have these events coming up. So it would be crazy to simply say, okay, we're going to trade based on these two indicators. Generally, only using two indicators, 2 to 3 indicators, can be relatively fine for you to have an understanding of an entry point. But again, they're not only two things that you can choose and you say, okay, if these two things hit, you're going to be profitable every single time. But it helps with the understanding of confirmations of entry and exit points. My exit point, as you can see, is somewhere about the simple moving average. If it comes into the middle, somewhere there, I'd get out of the position. There are one-on-one courses that I am happy to give. You can find that on my channel. You can find it on the Instagram link below. There, where we can discuss further one-on-one on what your trading style is and how we can potentially look at adding different tips and tricks into that in order to keep it good as well. I want to keep this video under 10 minutes. We've just hit that mark. So again, wish you a beautiful Christmas in the next few days and hope to upload another video in regards to technical analysis before the end of this year. Thank you and have a good one. Ciao.